Hey there, welcome back to my channel, it's me the Mind Injector, and in this video we're talking about NIO. There's been a lot of buzz lately about NIO stock, and I know what you're thinking. Could NIO actually hit $8 in the near future? Well, today we're going to break down everything you need to know about NIO's latest earnings report, analyst upgrades, and whether this stock could really be poised for a significant rebound. Alright, so let's dive into the numbers. NIO recently dropped its second quarter earnings, and it was a solid performance. They reported a per share loss of 30 cents, which beat Wall Street's expectations by a hair. Analysts were expecting a 31-cent loss. I know, it's still a loss, but the key thing here is that NIO's gross profit margins jumped to almost 10%, doubling from the first quarter. And that's not all. NIO expects to deliver about 62,000 cars in the third quarter, generating around $2.7 billion in sales, which again topped expectations. This performance is catching the attention of big-name analysts like Nick Lai from JP Morgan, who upgraded NIO stock from hold to buy and raised its price target from $5.30 to $8. He's optimistic that NIO's cash flow will turn positive in the second half of 2024, cutting their cash burn in half and reducing the need for NIO to raise more capital. Now, NIO ended second quarter with about $5.7 billion in cash. But here's where things get interesting. The company is using roughly $500 million per quarter, and with operating cash flow expected to turn positive soon, they'll likely be spending far less, around $250 million each quarter. This shift could give NIO the breathing room it needs to avoid further equity dilution and fuel future growth. But not all analysts are singing the same tune. While most of Wall Street is backing NIO, with 62% rating it a buy, there are some cautious voices out there. Take Mizuho analyst Jason Getz. He's lowered his price target to $5, pointing out the challenges that NIO and other EV makers are facing in terms of price competition. Even so, the consensus seems to be that NIO has more upside than downside, with an average price target of $6.70. Now, let's talk about those catalysts that are fueling all this excitement. One of the biggest drivers is NIO's record vehicle deliveries. In second quarter, NIO delivered a whopping 57,373 vehicles, marking a 143.9% year-over-year increase. That's huge. And it's not just about quantity, NIO's vehicle margins also improved, jumping from 6.2% last year to 12.2% this year. These gains, driven by cost optimizations and higher delivery volumes, have helped offset the rising operating expenses, giving NIO some much-needed momentum. So, does all this mean NIO is in the clear? Well, not exactly. Despite these improvements, NIO is still reporting a net loss of $694.4 million for the quarter. Sure, that's a 16.7% improvement from last year. But NIO's operating expenses, like R&D and marketing, are still pretty high. But let's be real. These are the investments that could set NIO up for future success, especially as they continue to innovate in EV technology. Looking forward, NIO is projecting to deliver between 61,000 and 63,000 vehicles in third quarter. If they hit those numbers, they are well on their way to continued growth. But keep in mind, achieving profitability is still a few years off, with analysts not expecting NIO to break even until at least 2027. Now, before we get too carried away with all the positives, we have to talk about the challenges. NIO faces some serious headwinds from China's macroeconomic environment and increasing competition in the EV space. Tesla, BYD, and XPeng are all ramping up their game, making the EV market more crowded than ever. But what sets NIO apart is their focus on the premium EV segment along with their innovative battery swapping technology, which could give them an edge as they expand their charging and swapping networks. Before we get into the exciting details, let me introduce you to Muma Financial. If you open a brokerage account with Muma and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks. bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. So, what's the next move for NIO? Well, some analysts believe that NIO stock is set to ride a bullish wave, with JP Morgan's Nick Lai suggesting that $8 is in sight. But here's the kicker. For that to happen, NIO stock needs to break through its recent swing high of around $6. If it can close above that level, we could see a medium-term bullish trend unfold. However, if you're bullish on NIO, it's worth considering a long position with a stop loss set around $3.93. On the flip side, if you're more cautious, waiting for the stock to fall back below its 100-day moving average before shorting could be the safer bet. In the end, NIO is at a crucial juncture. With stronger cash flow, improving margins, and record vehicle deliveries, there's a lot to be optimistic about. But NIO still has some major hurdles to clear, both from a competitive and economic standpoint. Whether or not they can hit that $8 mark depends on how well they execute in the coming months. So, if you're bullish on NIO, now might be the time to keep a close eye on those technical indicators and fundamental performance. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.